The current economic climate is tough for entrepreneurs, and there are many distressed businesses out there. This has a number of legal implications for buyers looking for bargains. Let's see what you need to look out for. We have George Nell, Senior Business Rescue Practitioner and owner at Corporate Business Rescue, and Jeremy Lang, Regional General Manager at Business Partners Limited, joining us in studio today. Gentlemen, thank you so much for making the time. George, let's start off with you. When you're doing the due diligence process, sitting down with this distressed business, what are the key indicators of health that you should be looking for before you decide to jump in?
In my position as a business rescue practitioner, it's a bit of a different story. The business is already under business rescue, and I have to see to get new investors, new shareholders, and so on. So it's a bit different than the specific question. Maybe Jeremy can assist us there when they get people that ask for finance, how they do it.
Maybe in your case, George, you know, what indicators would you be looking at that'll tell you that this business is actually rescuable?
Well, the definition of business rescue is a very broad definition. I've said it before. It's a better dividend than in liquidation. So that's not really business rescue as I see it. What we would like to see is that the business continue in existence, that the employment stays in place and so on, and that I don't sell the business as such. So what I would like to see is that employment stays in place first, as the first instance, and that I can have a compromise with my creditors so that the balance sheet entry is much better. Because if the balance sheet, usually the business is also insolvent if it becomes my problem. So I would like to see the balance sheet to better by doing a compromise with the creditors through the business rescue process.
Jeremy, do you get a lot of applicants for distressed businesses? Do you get guys saying, I can save this business, but I need to raise funding to be able to rescue this business? I mean, do you see a trend that's happening there at the moment from a financing perspective?
Not many, I must be honest. As of late, I can certainly say with a bit of confidence that the applications we are getting are more expansion type projects, which is good to see. We have received them in the past, and we've done a couple of them fairly successfully. But maybe to come back to your question in terms of what do we look for,
right?
And the first point is that you have to understand the situation. What is really going on in this business? Is it in distress because it's overgeared in terms of debt? Is it distress because of the management abilities of the company? Or is it just general market conditions? So once you understand what's really going on in that business, you can then start to find solutions, whether they may be via financing a new buyer. So understanding the situation is very, very key in our assessment. So the ultimate question is this business viable if we restructure the balance sheet, if we put in more money, etc., etc.
But I mean, they say time is money, I guess, in a business. And when you see it and you're already under business rescue or on the cusp of business rescue, and somebody comes in and says, I think I can do something with this business. Every day literally could count if you've got money going out the door. How quickly can you sum up a situation and make that decision? You know, if somebody came to you tomorrow and said, I've got a business I'm interested in, how quickly could you make that decision?
That is a very, very tough question, because it depends on the nature of the business. If you're dealing with very complex businesses with highly complex production processes, it could take longer, because the problem might very well be in the technical nature of the business. So, but on the general type of businesses that we finance, which predominantly are lifestyle type businesses, we finance many of similar businesses, service stations or restaurants, etc., etc. Then we know the key drivers of the business, and we can pinpoint them quite quickly. So within a few weeks, sometimes even less, we can pick that up.
And from your side, George, if you look, do you find that often the getting the stakeholders all together and moving in the same direction takes longer than it should, or?
No, my job is to explain to the stakeholders what their problems is, the creditors, the shareholders, employees. And if they can appreciate my explanation and understand what their problems is, I must offer them a solution. And if I offer them the solution, maybe I say to the concurrent creditors, your claim is 100 cents in the rand, I'll offer you 50 cents in the rand. And in a liquidation, you'll get 2 cents in the rand. So then they understand their position, and they say, I will accept the 50 cents in the rand, and so on and so on. So you have to explain to them what their position is, and then you have to offer them as a solution.
I mean, I look at the aviation industry. There's been one announcement for an airline that's coming through and then not taking off, and then another announcement comes, and no one really really takes off. And that tells me that it's a very difficult industry to get into right now. Price of oil is expensive, people aren't traveling as much, etc., etc. Now, looking at your businesses, which sectors are most most at risk of experiencing distress and maybe going under, so that people that actually want to get into business or want to buy businesses can actually think, I must tread carefully when I go into this sector.
Yeah, the ones we experience are the ones certainly that are capital intensive, and that you need a fair amount of debt to purchase them. So as soon as there are tough economic conditions or fluctuating interest rates, you get a double whammy, because you get a reduced turnover as well as increasing costs of finance. And that puts the balance sheet under tremendous pressure, and it has a spiral effect through the rest of the business in terms of cash flows. So the most difficult at the moment, and certainly the trends that we have seen over the past few years, are the capital intensive businesses, the transport companies, the aviation companies with big assets. Those are really the ones that have taken a bit of a beating over the last year.
And construction companies doing business with state organs, unfortunately, getting paid very slowly. And we had this discussion before, getting paid very slowly, specifically construction, transport, media. There's some media problems now lately. It's a marginal business to be in a media business, and the different areas in the country has got different problems. But especially the construction area, I think, is under tremendous pressure.
George,
yes.
I want to touch back on a point that you raised earlier. This is around the creditors. Do people always understand that they have the space to negotiate around debt reduction? And is that a viable thing to do when you find that the biggest issue is the creditors? Is there space to negotiate that down?
Well, definitely so in the business rescue. That's what the legislation provides for me to make a compromise with the creditors. That's one of the possible outcomes, that I can compromise the debt with the creditors. Yes, there is space, and that is specifically what the legislation was enacted for. But it's sometimes difficult. The creditors must understand their position, and luckily I have to compare it with the liquidation scenario. That is, the Act also provides for that. And usually the liquidation scenario is such a bad scenario that I can easily sell my plan to them in regard to a compromise as such.
How much does ego play, though? When a business gets, it's a very general question,
right.
But the role of ego. So you've now got a business that is essentially in a distressed format. It is under business rescue, but a lot of it is, a lot of the entrepreneurs poured his heart and soul into running this business, and suddenly a business rescue practitioner has to come in and say, hey, you might not actually be the right person for the job in this current situation. Your only option is to introduce somebody who can do the job better than you.
Difficult. Small and medium enterprise, it's difficult to take the jockey away. It is a bigger enterprise, yes, you can get a new board and you get a new managing director and CEO. But smaller enterprises, they've signed sureties. There's actually the business and the owner is one person. Even though there's a PTY limited behind the name of the company. They've signed sureties, their whole life is in that business, so it's a difficult one to chase that person away. Then I'll rather try to sell the business as such.
Jeremy, there has been an argument that says sometimes it's always better just to form a new legal entity altogether and just acquire the business in that sense, as against trying to go in and bring life to a patient that is not about to come out of a coma, whatever the adjective is. How strong is that argument?
They have pros and cons. Sometimes there are tax benefits in keeping it in the same entity, and there are various debates around that. We more often than not push towards putting it in a new company, and there's a very good reason for that, because on the current financial information that you can obtain about the company under discussion, it's very easy to verify the information that's in front of you. The big question is the unknown. How much is SARS in arrears? Who have you signed surety for? What are the contingent liabilities? What are the pending legal cases against you? And those are not necessarily information that's going to come up front. So we more often than not would prefer to finance in a new company and buy the assets out of the existing company. There are also other tax implications like VAT implications, etc., depending whether it's deemed to be a going concern purchase or not. But more often than not, we believe it's much cleaner, it's safer for the buyer and the financier, and we believe that to be the better option.
What about the role of goodwill? I mean, essentially, if you look at it from an accounting perspective, you've now got a business that derives a lot of its valuation, because obviously if it's getting into a distressed situation, it doesn't have the cash flow, but it believes it has goodwill either in its brand or its supplier relationships, etc. Should they be writing that goodwill down to nothing and essentially being stripped to what's coming in and what's coming out?
Yeah. Look, you can buy the assets out of the business in two instances. One is as a going concern, if the business is still trading and the underlying conditions sort of justify a going concern, then you can buy the assets, including the goodwill, out of the business. But let's take, for example, a fast food restaurant. As soon as those doors are closed, your goodwill's gone, because you're not really going to get much more than the value of the chairs and tables in that place, and that has been our experience. So as far as we are concerned, the best position is to keep the doors open and try and sell it as a going concern, because then you realize the element of the goodwill. But once the doors are closed, the value really of that business is the value of what somebody's prepared to pay for those physical assets.
And George, I mean, do you find the same kind of situation happening there, where people say, but my brand is worth X
Well,
amount?
definitely so. But what we must take in, had a discussion before, Section 34 of the Insolvency Act states that you have to advertise any sale of a business or part of thereof.
Sure.
And the money and the liabilities immediately must be paid at that specific stage. So a business under financial stress that wants to sell the part of the business must advertise. Otherwise, and if it doesn't advertise, then it's a voidable transaction. We must take cognizance of that.
I want to drill one step deeper and look at the people aspects. Now, what should you be looking out for to make sure that you don't get tied to contractual obligations to staff that you may not necessarily even want to keep?
Yeah, there the going concern issue plays another very important role, because when you're buying a business as a going concern, you are obligated to take the staff over under the same terms and conditions. Now, one issue that's normally underplayed in terms of a sale of a business is that those staff comes with a lot of liabilities, leave pay, and etc. So a buyer must be very clear on his obligation, financial obligations, with taking these staff over as well. In terms of a liquidation or the purchase of assets, it's obviously a bit of a different story.
How is appetite like in terms of buyers coming to and saying, actually, I've got some cash, I'd like to buy distressed companies or distressed small businesses?
Yeah, we do have a few contacts that phone us often, what are the good bargains in the market, etc. What we try and do, because the entrepreneurial risk assessment in our business in terms of financing is critical, is absolutely critical. So we do here and there, we do a bit of matchmaking, especially with our existing clients that has a similar business or can absorb that product into his business, into his supply chain, etc. So there are a few, and we do a bit of matchmaking, but it's not in big numbers. I can say that with confidence.
I just want to come back to this question about people. And I suppose this is anecdotal, but do you believe that labour relations legislation that's in place actually prohibits a lot of business rescue taking place? Because there's a cost associated with everybody wants to save the jobs, but the reality is that if the business was running optimally, they wouldn't be in the business rescue situation. Can there be improvements made in the labour legislation that would improve business rescue?
Definitely so. I have to compare, as I said, liquidations with business rescue. In a liquidation, the claims of the employees are kept to 12,000 rand severance, notice, and leave pay. That gives you 36,000 rand. That's capped. In a business rescue, I have to pay all the arrears, and I have to keep them employed on the same terms and conditions. It's a massive burden to the company and to the business rescue practitioner to explain to the new buyer that I have to pay these guys the arrears and future payments. Then they say, rather liquidate, and I'll buy the assets out of the liquidation. So that's a reality, and there can be changes to the Act in that regard.
Talking about labour relations, and I know you have quite a bit of a number of clients, a fair number of clients in the petrol fuel retail industry. Have the strikes or the ongoing strike in South Africa led to an increase in businesses, getting distressed? I mean, are you seeing that trend coming through, or at least are you expecting to see it?
Yes, I think with no doubt there will be a ripple effect through many industries as a result. We've already seen some, I've read in the media regarding the production of vehicles has already have had an impact. So I don't think we will see the immediate impact. I think it will take a period of time. Ultimately, rising fuel costs, etc., all of those things will have effects on inflation, and it just has a spiral effect where everybody is affected. So over a period of a few months, I see we will see even further impacts coming through.
Quickly, George, just before we wrap, the last question. I mean, I want to go back to a point that Mark made when he said that it could be a question of ego. And to a large extent, I agree with that, because I think it might be so much a question of ego that entrepreneurs may not know that they actually need business rescue. And in that particular case, what are the three things that, or three red flags that you say, if this is what's going on in your business, then you should be seeing me?
They start not to pay over the taxes. I think that's the first place. Pay as you earn and VAT. If you start slipping on that, you must know there's big problems. That's a statutory duty on you to pay that over. And then your banker will tell you your overdraft is now not being managed correctly, and so on. I won't say there's a third specific thing. I think you must just stop spending too much and make harder work.